Welcome back to Krown's Crypto Cave as we get ready for a actually very lovely Friday morning over here from Helsinki, Finland. I would like to wish you the best and the haps of the haps before we look at this monstrosity of price action over here. As it can only help, at least I hope, especially in this time in the world right now where everything seems to be a little bit interesting to say the least. Anyways, more importantly, I want to follow up on the short-term price action that we saw from yesterday. Bitcoin taking the southern road, although it wasn't necessarily what I was looking for myself. It was one of the areas that we were kind of looking at. So I want to follow up on that. I want to spend a lot of time also talking about traditional markets today as well, as I do believe that that is the key to understanding right now. And on top of that, I will not be on Twitch. I haven't been on Twitch for like a while. Maybe I should even just stop talking about it. I will be on my gaming channel, of course, for anyone who happens to be interested in strategy games or especially Total War. You're more than welcome to join in over there because I could use more friends at my new channel, Total Krown, here on YouTube. I have a link in the comment section below, but of course, do not feel obligated to go check it out or anything like that. But if you do want to support, then be my guest. It would be more than appreciated. Anyways, what else do I want to say? Let's talk about the Krown trading app. We got a lot to talk about today. We actually have something new going on right now. So open interest is actually still right at that major level that we were speaking about yesterday, that 1.7.5 billion marker with a B, which really is the key to this next major change in behavior for Bitcoin. While Bitcoin did take the southern road, we have not really seen the long-term area get taken out to the downside, just the short-term and the medium-term area, which did extrapolate the next move down to the low 9,000. But what's going on right now? Well, it would suggest that we are still within the context of a greater consolidation on the higher term timeframes, which still leaves the door open for the BULAs. But now that we are closer to the downside of this range, well, bears are going to have, once again, the probabilities likely in their favor. So that is going to be taken into context with the open interest read, which I still need to see close above or below one of the long-term areas. For the upside, still the same at about 9,900, 10,000 for the more conservative traders out there. For the downside, still about 8,800 for the more conservative traders, about 8,700 before we get that downtrend, plus a move outside of the range between 1.5 billion to 1.7.5 billion in the open interest for what we see here on the Krown Trading application, which, by the way, is 100% free and can be found at sorry, can't speak. App.krowntraining.net. And oh, by the way, there won't be an update this week, as usually we have updates every Friday, adding more features. But in order to prepare for the next evolution of it, this week is actually not going to have any update. Next week is going to actually have a lot of cool stuff coming in, though. So it's for a good reason. Anyways, Bitcoin dominance still actually moving up a little bit yesterday. So Bitcoin going down did hurt altcoins. Usually the relationship that we do see a little bit more. And also the crypto fear and greed index really coming down hard as well, back down to a 38 from a 52. God damn it. It's fucking water in the background. Oh, well, whatever. Me just having a Tourette's outbreak right there. So let's go check out the actual price action right here. And for right now, I want to kind of follow up on yesterday's price action first, as we did see, like I said, we did see the downside emerge, which was ticked off by two different things. First and foremost, obviously breaking below the prior low on our lower term timeframes, that 9,500-ish region. The warning signal was fired though on the takeout of this week, of this wick that we saw on the 8th of June at 9,550. That's where I de-risked myself. Actually a little bit higher than that as well. And I did end up taking about a $50 loss in price action. Obviously not a $50 loss overall, but I'm interested in things in price action to keep it, steady. For all the people out there who are like writing comments like, get wrecked, Krown, fuck you, Krown, hope you die. It's like, whoa, okay. Good day to you too, sir. Like, Jesus, man. I have a sneaky suspicion that people who write comments like that, they probably don't trade themselves, because if you do trade and you were on the downside, then you're probably happy enough making money on that side anyways. But maybe that's a different discussion for a different day. Anyways, for what it's worth, I actually did buy the test of the what was it, the daily, no, it wasn't the daily 21, it was the 2-day 21 or the 3-day 21 down here, and ended up making $200 in price action on the way back up. So for all the people saying something like that, well, understand that trading does not mean hodling until liquidation of your whole account. Anyways, moi moi, goodbye. And thank God, because what are we looking at right over here? Well, Sorry, Elsa's leaving right now, so no more fucking dishes for the love of fucking God. And what do we see now? Okay, so Bitcoin did take out that level, which then extrapolated the next move down to the bottom side of the range. The bottom side of the range going to be a little bit front ran from what we saw yesterday, which does make me think that we probably do have another move back down to test. However, overall on the lower term timeframes right now, Bitcoin is constructing some pretty nice hidden bullish divergence on the 4-hour RSI. Also kind of playing out a retest of, well, actually, no, didn't really test this trend line down here that was formulating, but still did get a lower low on the RSI, correlating with what looks to be a higher low on price action. So I actually do think that Bitcoin is going to pop back up here, test around 9,500, very likely. And if Bitcoin can close back above 9,500, then I'd look for it to regain this range right here, the fuckboy range, as we've been kind of calling it, where I don't really have a specific target after that. I do think that 9,800 is very likely to get tested if that were to happen. That happening meaning like a 4-hour dildo closure above 9,500. Probably even a 2-hour does it as well. Let's go check it out. Yeah, I would want to see 2-hour above like 9,550. Be a little more conservative there. But overall, I would still look at that as a good short-term kind of change of behavior indicator, or good pivot point, if you want to use that terminology. All the same fucking thing, man. And I use these words interchangeably. But overall, that's what I'd be looking for probably over the weekend, as we are going to see hidden bullish divergence very likely give at least a little bit of a try up to the upside there. And that's going to come along the side of potentially momentum also just turning back up again as well. We do see 4-hour Stokes getting all the way down to the low side of the bearish control zone. But let's see what would be needed to cross them back up to the upside. We need to close the next 4-hour dildo above 9,500. Beautiful confluence right there, because that is the short-term range. So if we do see a 4-hour dildo closure, or probably even a 2-hour dildo closure above that 9,500-ish level, we're going to see momentum turn back up again. And I would be looking for very likely a move back up to 9,800. I think that would be a conservative estimate. And then realistically from there, I'd kind of, come back into normality and still look at this range in the same way that I've been kind of looking at it for the last week or so, where Bitcoin, yes, it's very close to breaking to the upside, but we just don't have that confirmation just yet, as blue box territory still holding it down, coming in at 9,900 for an aggressive read and 10,000 for a conservative read. I do think that the aggressive read actually here would be at least good enough for me to trade on, but of course this is not financial advice. I'm not a financial advisor. Let's go check out the other lower term timeframes. I'm just curious if they have the same sort of confluence. Yes, we do see the same sort of hidden bullish divergence on 3-hour RSI right here, as we do see realistically these lows were so far away that it doesn't really amount to that much right now. But 4-hour you kind of could kind of make a you could kind of make an excuse for there. Anyway, same thing here though. We do see 3-hour Stokes actually trying to cross the upside right now. They will naturally cross the upside with any sort of a closure on the next 2 minutes and 30 seconds. So we'll actually see this one together above 92.31 spot 10. So that's looking pretty damn likely right now, which is going to likely propel a test up to the 200 simple, which is at 9,500-ish region. That's the next, again, gatekeeper or pivot point for the short-term time frames. Closure above there, or even around there, probably does get that next move up. So I do think that regardless of whether you're bullish or bearish here, I do think that Bitcoin's going to pop back up here. Of course, I do not trade my own opinion, and I should be trading the jewel. By the way, I really want to follow up on that as well. Jesus Christ, man, I just do not learn my lesson now, do I? Looking at the 2-hour, same sort of thing, 92.85 to the upsides, closing at the same time, 1 minute and 50 seconds from here. So momentum being gained on the short-term timeframes to the upside, and hourly showing the same as well, or actually momentum already to the upside and will remain to the upside as long as closures are had above 9,200. So all these timeframes, 1, 2, 3, are going to close in the next minute or so, minute and a half, I suppose, and so we'll have clarity in that situation, which very likely does lead up to a test of 9,500. That's when the 4-hour can start to take over, and hidden bullish divergence would not only play out, but also imply a target to the top side of the range. Like I said, conservatively around 9,800 sometime this weekend. More aggressively, perhaps could even include a break of 9,900 to 10,000, which then would make me bullish for a move to about 10,500 and perhaps beyond. But for right now, Bitcoin is still holding the overall formation as an ascending triangle, to be fair. So I do think that it's a little bit premature to get super bearish off this. As I've been saying, it's not until Bitcoin either closes a 4-hour dildo below about 8,700 or just wicks below this low right here at 86.32. on GDAX? Or is there another way that we could do this that's a little bit more premature? Yeah, closing below 8,900 doesn't look too hot either. You know, we do have this rising trend line coming in from the last couple lows, and that would be confluent with the 236 Fibonacci retracement right here, which is actually just under 8,900, but rising over time. So Bitcoin did come back down and test it. That's not too problematic. It's once we actually break this and close either a 12-hour below this area right here at about 8,900, 4-hour below 8,700, or even just a wick below that 8,632 low. If that does happen, that's when I do really start to turn bearish for a long-term move, very likely down into the 7,000s, maybe even the upper 6,000s. As I've been showing, there is a measured move if we do break below that level down to actually 7,500. And do notice that all of these areas match up very naturally with these high-term time frame moving averages right here. By the way, 236 coming in at our current support for this ascending triangle. And yes, I do still look at it as an ascending triangle. The volume signature is still very much in line with that, having that nice tailing off effect from left to right. But that means that if we break this area right here, then that whole idea, that whole formation is destroyed, and this looks a lot like distribution rather than a reaccumulation formation. But for right now, you can still certainly make the argument for that, and on the way down there, very likely would be bounce. It's not going to be a straight shot, but if that downside trigger was hit for the high term timeframes, then I'd look for a bounce along the 382 at around 8,100-ish region. That's also where the 200 simple is, I believe, on the daily. Yeah, it's actually right in line with it. Also, the big breakout and breakdown that we saw from March, going from 8,000 to 4,000, and then from April, basically May, going from 8,000 to 9,000. So a good historical area. Although I do not think that would hold it. I think that it would just bounce it, and then we'd very likely come down to the 0.5 at the very least at 7,500. Perhaps play at a bottom there. I need to see it in real time, but my personal disposition is that actually this area would very likely fail, and we come down to the 618. Right around about 6,900-ish region. Lovely historical area right here in this liquid zone before that big breakout where things really did start to shift around as far as high-term time frame biases go above 7,500. So I do like that area overall. Now, if 6,900 were to break, then we could talk about macro downside. I mean, that's a point where I'd really be looking for Bitcoin to come back down below 5,000, maybe even 4,000. But for right now, I think that that's very premature to be saying. And I think that, people talking about like massive downside, could it happen? Yes, absolutely. I mean, there's always a possibility, right? This is a game of statistics at the end of the day. But does that mean that it's the most likely thing that I should be trading for right now? Well, no, not until those triggers are hit, at least in my disposition. Now, to be fair, yesterday there was there was a tale of two jewels, right? So yesterday I was saying that the 4-hour jewel was kind of given a haughtier long signal right here, and I would actually stick with that. It was a little bit of a haughtier long signal. Obviously did not play out, at least in the way that you'd hope for it. It would have been a pretty dastardly move to actually have taken buying at this 9,900-ish level right here. But to follow up on the earlier week's action that we were kind of speaking about, for all the people who took the daily jewel sell signal, which was a pretty damn good signal to be fair, congratulations. And I want to once again humble myself before the jewel, because it has once again been right while I am completely fucking wrong, and well, I pay the price for it. So fair enough. At the end of the day, for whatever reason, just don't seem to learn my own lesson. I was really hoping that was going to be the time where I was going to be right and the jewel was going to be wrong. No, the daily jewel tells all. Do not fuck with higher term time frames, especially on the jewel 4-hour. Obviously that was a counter signal. A little bit of a fake out to myself, but here was the icing on the cake. Was the 4-hour on CMEs was not giving you a haughtier long signal at all. In fact, the 4-hour was more of a rejection of the fib right there, if you are familiar with this tool. Anyways, so yeah, it's that was completely my fault right there. Should have had the wherewithal to have gone to CMEs for the tiebreaker on that 4-hour, and then gone with the daily, which was present on both, by the way. Anyways, for what it's worth, typically when I do see a daily jewel sell signal like this, it typically does play out for more, to be fair. Especially, this one's not super perfect, but it is pretty damn good coming alongside that fib rejection as well. But usually you will get a run from fib to fib. So that doesn't necessarily mean that price action has to come all the way back down. It could very easily scrape back down to the low side of the range at 8,900 region over the weekend. And that would probably be enough to bring it down. But I do want to say congratulations to all the people who were very patient taking that signal, going in all the way from about 9,900 right in over here when it was given, and then holding it for like a week and getting that $1,000 or almost $1,000 move. Fair enough, congratulations to you. And I do want to give credit where credit is due, because a lot of people called that out in the Jewel section on Discord, and that's awesome, man. I am sincerely happy for you. Anyways, looking at this right now, I also do want to say that the daily 21 is coming in at that 9,500 pivot as well. So as long as we are below that area, it's not the short-term pressure down, but it's also higher-term time frame pressure down as well. But I do have a sneaky suspicion that we will see that hidden bullish evidence play out, and with a 4-hour closure above there, should see the gravity or reverse gravity kind of take over and bring it back up to the top side of the range, mediated by the 9,500-ish level. And if it can get a daily closure above that level, that would look pretty damn good. So now I really want to go over and check out traditional markets right now, because this has been a big focus, and we did say that yesterday. A pullback in NAS and SPY was likely, and we did get that. In NAS, we hit our 9,700 target, or I was saying 9,750. And on a closing basis, actually closed down at 96.21. Interesting. But now currently hanging around the 9,700-ish region, and more importantly, bouncing off the 21x benchmark average right here, which thus far, again, this is looking like it's going to be a higher low to me. We do have potential hidden bullish divergence in place on daily RSI between this point and this point right in over here. And that was a low that correlates with that $9,000 or $9,100 pivot, depending upon how aggressive you want to be with that, which to me is very important for the long term. I do think that there actually is some downside in traditional markets right now, which probably doesn't bode all that well for Bitcoin. But I do think that it would be very premature to get like high term time frame bearish on on Nasdaq futures, as I've been saying for a while now. As long as it's above 9,100, especially, that would just be considered a backfill from, I believe, last month's price action. It's going back running over here, or sorry, actually this month's open. More importantly. It's coming in from this liquid zone right here. Yes, yes, it is a backfill. It is actually coming down around this region. Yes, okay, cool. So it does have good confluence there. But for right now, looking at the weekly and the way that it's kind of likely to close right now, it does look like we are setting up for a pullback, likely around that region, between about 92 to 9,300-ish region. I would like to see a test of the 10 simple on this, but I want to be very specific in stating this. While I am looking for a pullback there, probably over the next few weeks, as we've been saying, pullback very, very likely in this market, sometime either in late June or what's the month after June, whatever the fuck that month is, that month too. I would look at that very likely as an opportunity. I do think that the next test on the 10 simple is very likely to be potentially a long-term buy, at least for myself, although I don't trade this one, so it's kind of a silly thing to say to begin with. But realistically, going down to the low-term timeframes, we see the same thing here that we see on Bitcoin, right? These markets are fucking correlated at the end of the day. Even, I usually talk about the correlation on the macro scale. Even on the short-term timeframes, we actually do see them play together quite well, with NAS kind of setting the tone and being the powerful leader, Bitcoin not following as strongly, but just relative weakness. So that means that weakness shown in NASDAQ, for example, is going to be met by even more downside in Bitcoin, correlatively speaking. But as we can see right here, we do have that same sort of hidden bullish divergence, which is actually very, 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 very overdone, as you can see here, getting all the way down to a 30 read. Compare with our last few lows on this rally to the upside are all like above 40, which is kind of crazy. So what does that mean? It means that regardless of whether you're bullish or bearish, very, very likely this thing does pop back up and test around 98, maybe 9,900-ish region. The question is, do we get closures back above there? If closures happen back above there, especially on a daily or above, then I would be looking for this to very likely set in a higher low right here and chug its way onwards and upwards into new all-time highs once again. I mean, at the end of the day, this is still a fucking uptrend on a daily. All these tests down to the 21x benchmark average have been beautiful. And if things were to get a little bit more nasty, like I've been saying, I would be looking for a move down to about 91.50, and that's where I'd be looking for another potential low. And I do think that that would be an opportunity potentially for long term. Everyone would get super bearish around there as well, telling you that the market's going to fall back down apart again. Well, it's the same people that were shorting right over here who might even still be short off of those positions. positions, just hodling and praying. Just as bad as like perma bulls are, so are perma bears. It's the same disease of the mind. You've joined a gang. You're no longer a trader. You're no longer seeing things as they are. You're seeing things through the lens of someone who needs to be bearish because, well, whatever, or just as the same as someone who needs to be bullish because XYZ irrelevant reasons, typically speaking. So, or fundamentals, even better. So, looking at this right here, I do think that this will really back up a little bit. And then depending upon how the close is today, is going to be very insightful into whether this is going to be that local top that likely does propel that next move down to about 9,100, or if this is actually just another higher low before getting ready for new all-time highs once again. So what can we say about that? Well, a daily close above the 10 simple, above 9,800 would look pretty damn good for at least another try towards the prior high at 10,000 or 10,100 for NAS futures. And a close below the 10 simple, while it doesn't necessarily imply that we will come hard to the downside down to that 9,100 region, but especially a close below the 21 would, which is 95.50 right now, thus far holding up the bounce. And I do think that the bounce very likely will play out. We're going to see low term time frame oscillators reset quite aggressively, 4-hour SOX coming all the way down to the low side of the range, which in traditional markets does take on a bit of a different read. That's actually quite bearish in traditional markets. But for right now, I'd be looking for this pop back up, test around 9,800, and then if today's daily total closes above 9,800, I would look for next week to give another try towards the prior all-time high and maybe even beyond. If we close below 9,800, then I would keep the downside in mind, but the downside trigger for that move to 9,100 really doesn't get set off until we actually start to close back down below the 21 on the daily. I'm just not bearish on any asset ever that's in an uptrend on a daily and is above the 21 exponential moving average, while all major moving averages have positive slopes. It's just doesn't mean it's always going to work out. It doesn't mean that it can't reverse. It's just I hold on to that disposition because it keeps me long through here, and potentially even here. And it's game of statistics. So at the end of the day, this is I'd much rather get 4 out of 5 than, well, short. Oh fuck, I'm fucked. Anyways, so yeah, that's what I'd be waiting for. I want to see today's daily total closure, but I do believe that this one will pop back up, test around 9,800. The key component though is where does it close? Now we are seeing historical volatility percentile start to pop back up as well. So we're about to see an expansion phase here. The moving average on this has starkly changed, most importantly, and that does suggest that the expansion should get the next major move. The expansion should imply a long-term move here. So that means either new all-time highs or we're going to come down pretty damn hard to about 9,100, which from this price point is almost a 10% move, which is pretty damn impressive. And what does that mean for Bitcoin? That would mean Bitcoin probably breaking below that critical long-term area to the downside and really setting in the tone for a major move down to, like I said, maybe even the low 7,000s, upper 6,000s. E-mini futures for SPY, how are they looking? A lot less healthy actually than NASDAQ futures. And that is problematic and does make me really reconsider what I've just been saying there. This is the golden cross on the daily exponential moving averages almost happening, but the classic fucking play as this cross happens to know if it's going to be good or bad. And the people in the TA program, if you're unfamiliar with this concept, just reference the EMA module. It's going to go into it in depth, but basically, as this cross kind of hints at happening, price action typically does get brought down to it to test it, and then you get clarity on the situation if it's going to work out or not by the reaction or response from price action as that happens. So we want to know if the Boston algos are on the buy side or the sell side or on the trap side. In this case right here, if we do see any sort of a daily total closure below the 200 exponential moving average, this is going to be a very nasty trap, and we'll very likely see things on SPY come back down to at the very least the mid 280s or low 280s, probably though the mid 270 range. So I'll mark it off right here. I don't know if I maybe already have it marked off. Oh, I do already have it marked off. Nice. So yeah, I'd be looking at the very least for low 280s right here, probably all the way down here though to the mid to low 270s, if that were to happen. So again, big area right here, and with today's daily closure also being a weekly closure, I keep an intentful eye on the 295 level. 295 level, incredibly important here. So overall, we did hit our 305 target to the downside on this pullback. The question is now, is this going to be a higher low as it looks like in NASDAQ, which I do think is probably happening right here. Also accompanied by some pretty severe hidden bullish divergence. I mean, this is pretty fucking aggressive bullish divergence, hidden bullish divergence, I should say right there. So I do think that this thing will pop back up and test around 310, probably 313 sometime today, tomorrow, or I guess tomorrow's weekend, but Monday. And then any sort of a closure back above 313, and I'd be looking for a retest of the prior highs and probably beyond. As long as we are below 313, though, it's just a range with the key components being basically where we are right now at about basically about 3,000 even. Could probably use that as a nice pivot for short-term action. And then mediated by the area that we saw on the daily as well. That's the more important one right here. So I'd keep an intentful eye on that because it's very likely to set the tone for Bitcoin. We've just seen these guys move together in the macro perspective for a long time now, and now we're even seeing it on the micro as well, which is kind of strange, kind of scary. Anyways, let's go check out gold as well. Gold popping back up as we said. I was obviously wrong about this one early this week, heading down lower to the mid 1600s. We got down to 1670. I was saying 1650 to 1640 to be fair, so I was wrong on that one. But popping back up rather aggressively for the rest of the week. This is looking pretty damn good here for another try higher towards a prior high. Depending upon how this weekly closes, if this weekly closes anywhere above 1710, I would look for new all-time highs, but new highs on this run into the 1800s, in line with what we saw right on over here in our September 2012 last bull trap, a little bit above 1800-ish region, and then probably sets up for a move beyond. But this weekly closure going to be very, 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 very important. Anything over 1710 looks very good to me for continuation coming into next week to the upside. Again, 1800 would be a legitimate target after that for myself. Other than that, let's go check out how long I've been doing it. 26 fucking minutes. What the hell? What the actual fuck, man? Let's go check out CMEs. I haven't checked out these guys for a little bit of time. CMEs look interesting here. Any sort of a close above 9,500 for this weekly on CMEs does still look good for an overall flag formation over here. Do you want to call it an ascending triangle? Do you want to call it some sort of a symmetrical triangle? Do you want to call it a flag? Don't care what you call it. It looks like a nice consolidation. Looks very orderly. Coming off of an uptrend. Likely, you go with the former trend until told otherwise, or at least that's what I do. You don't have to do the same thing as me. In fact, you shouldn't do the same thing as me because we're going to probably naturally, I can obviously be wrong, and then more importantly, you can have different opinions on price action and both be right and making money, especially when you add in options into the equation. But for what it's worth right now on CMEs, any sort of a weekly close above 9,500, and this actually still looks fine to me as far as the time frame goes. Daily is going to be coming down actually rather hard on momentum oscillators though, so that is a little bit of an issue here. We will naturally see daily Stokes come down further as long as this daily close below 98.80ish region, so looking quite likely. And also this sell signal here on daily Jewel is rather disgusting as well, but I'd still stick with my guns, looking for 8,900 to 8,700ish region as that next high term time frame range. Until that area is broken, I really can't I really can't get too aggressive with looking for like massive downside. Not that I'm not looking for it, it's just have to see a little bit of a change in behavior there first. Historical volatility percentile on the daily as well is looking like it's ready for a nice big splurting of action. I don't really have a trend line to be made there, no regressions, but I do think that we are kind of going to very likely set up for a move to the moving average on this at the very least. We'll see if it's sustained or not, and that's going to be insightful of the efficacy of this next overall move, accompanying a break of one of the hopefully higher term time frame areas. If that happens, then extremely likely we're going to see one of those very nasty moves. What else do we want to look at? Yeah, this is also not looking too hot here as well. This falling wedge that I was looking at on CME RSI for the last year or so, coming down pretty hard on this one. Yes, it very likely does bounce off the exponential, but that's not a strong signal right there. Now, I know that you can also redraw it like this, and this is why I absolutely fucking hate wedges. But both of the ways of drawing this are technically correct. And the implication from it is is the one that's more ephemeral. The interpretation is what I'm trying to say. And what do I mean by that? Well, you can draw it both ways, and they're actually both correct. The more insightful thing is that if we break back down below this trend line right here, which would also accompany a break below the exponential, very likely it's going to break much further down south into the bearish control zone. But for now, you could draw it like this, still use this area as kind of like a signal point, and then also redraw it like this as well, and have both of those in there, and then look for this as a nice, as a nice trigger point for the upside as well. And you could kind of imagine that as a little bit of a triangular consolidation going in right here. So fair enough. It is still present in there, but obviously we're not going to see it take out the prior 60 high this week, or unless if something drastically massive happens in the next like half day. Very unlikely. So right now it's looking a little bit heavy. I'd say that that's definitely not a good read right there. But still, price action trumps all right now, as far as I'm concerned. So what I want to do now is I want to go back into our lower term timeframes and take this off. And actually, let's go check out historical volatility percentile on this time frame first. Yeah, it's expanding right now. So we are seeing the 4-hour expand. So we're seeing the 3-hour expand as well. Yes, all of these time frames should be expanding. Okay, hourly's coming down though a little bit. So, what is that aligned with? Well, let's pair it up with probabilities now. So, again, I do think regardless of whether you're bullish or bearish here, very, very likely Bitcoin does pop back up and at least tag 9,500. The question is, can Bitcoin close above 9,500 on, at the very least, a 2-hour, preferably a 4-hour dildo? And that would likely transpire another move up to about 9,800, which then we're in the fuckboy range. Doesn't really do all that much for me on price action. It's above 9,900 to 10,000 where I really start to get excited for actual upside to 10,500 and maybe even 11,500 after that. Let's go check out... oh my God, man, this Bali and Pig's mom turning down hard right there, really hard. That looks so good yesterday. That's, oh well, happens, man. Let's see. Okay, so to the downside, now we have a little bit of a flipping here as the downside's a little bit closer to happening. So I'm going to use 8850 as a signal point for that, kind of cut everything to the middle. And then for the upside, we'll use 9500. So again, the upside is not the long-term upside. This is only short-term upside relevancy. For the downside, that's now long-term, so it's flipped. It's quite literally flipped within the range, and we can go check out what the probabilities are showing right now. So what is the probability of today's daily dodo closing above 9,500? It's 37%, which is pretty fucking good. Below 8850, though, is actually reasonably possible as well, right around 12%, it looks like. Make sure, this is on future. Let's go current. Current's going to be a little bit more forgiving to the downside, actually. 29% for the upside and 70% to the downside. That should be more accurate, to be fair. But as you saw yesterday, even when probabilities massively favor one side, doesn't mean that it's gonna happen. It just means that it's more likely. Looking at the 12-hour right here, so the next 12-hour dildo closure, we do see 22%, spot 39 to the upside versus 8%, a little bit over 8% to the downside. So, the downside is certainly very possible from here, but I do think that it would be more relevant to look for a bounce first, and then if the bounce fails, especially fails at 9,500, then we should very likely look for a move back down to about 8,900-ish region, test this area, and then the big bang should be had. Does Bitcoin hold or does Bitcoin break? If Bitcoin breaks, bad, nasty, and it's time to now look at not only a breakdown, but also another macro lower high in a series of 3 years of lower highs right here, right here, right here, right here, right here, and again right here. If Bitcoin can only put in lower highs for 3 years, I would like I said, I do think that 7,000-ish region would probably bounce it pretty damn hard and maybe even reverse it. But you really have to start thinking at that point, like at what point do you just call this chart a dead heartbeat if this puts in another macro high right here? Obviously, it has not done that just yet. I want to be very clear and say this. It has not done that just yet. And I think that even if it were to confirm a macro high right here, it'd still take like another couple weeks anyways. So we're not really even close to doing that right now. But if it were, just speaking ahead here in the future, which is probably a bad idea. I like fucking hell, man. Charts that go on like this, just not making macro higher highs for a long time is not a good sign ever. And we're kind of getting to the end portion of this. If this thing doesn't start like actually making waves in the next like year and a half to 2 years, I'd say that's Well, what's the difference between this chart and then an altcoin chart? At that point, there's not. There's not. That's the problem. So, you have to be consistent with that, or at least I have to be as consistent as possible with that. Okay, cool. This video is already 35 minutes too long. Let's wrap this bitch up and send it off so that you can enjoy your day, or maybe you very likely already turned off this video, of which I'm now only speaking to the cryptocurrency. No, not the cryptocurrency. I'm speaking to the trading enthusiasts and the trading nerds, of which I am the biggest one. So I'm happy to be here with you all as we wrap this baby up. But overall, Bitcoin, I would be looking for hidden bullish evidence to play out. 9,500, a nice short-term pivot. If Bitcoin can close a 2-hour or 4-hour dildo above there, which I actually do think that it probably does, I'd be looking for another move back up to about 9,800. By the same token, if we do see a rejection here, and more importantly, a move back down below our current proverbial low at 9,250, with accompanied by either a 4-hour closer or even a 2-hour closer, I'd be looking for another move back down to test officially the bottom side support trend line of this range of the proverbial ascending triangle. I do think that things would bounce there again, or well, technically we didn't really bounce it before because we didn't really get there, but around 8850 to 8900 region. The question is though, does that bounce get sold into, and then we actually break below the relevant regions? 80, or let's call it 8,900 on a 12-hour closure, very likely does it. Also, by extension, a daily, or a 4-hour dildo closure below 8,700, or a wick below 8632. If one of those three things happens, then I'd be looking for the downside to transpire, and then we get to play the game of, is this just another macro lower high, baby? Of which, time to go to Forex, man. Time to go to Forex after that. So fair enough. By the same token, Bitcoin back above 9,500. I would look for extension to 9,800, and then we're back in the fuckboy range. I don't have a strong disposition. I'd want to see it in real time. If Bitcoin did reach that level, to kind of judge its chance to actually break back above the actual area that matters, about 9,900 to 10,000-ish region. For right now, we don't have that in the cards, and it's just a little bit further away, so I haven't really been speaking about it during this video, but still very much present there, still very much relevant, and all targets to the upside. If that area were to get taken out, still very much relevant as well. And I should remind myself that on the higher term time frames, it's well, looking at the monthly right here, momentum oscillators are still very much pointed north, still very much erect. We see that on both Stokes and RSI, and the Joule actually giving a nice holiday long signal as well. So I would say that is still in the cards for the bulls, and we could very easily come down to the open of May, and that would just be considered a backfill. And where would that kind of put us around? Well, quite literally the bottom side of the proverbial ascending triangle that we've been looking at for the past month and a half now. So I think that's a good place to kind of leave it off. I would like to take a second to sincerely wish you well once again. I'll be back on tomorrow with some more cryptocurrency and, well, just Bitcoin analysis, really. Take care, and until next time.